I'm Matthew Galgani with a quick look at how to count bases and why that's important. In the series of videos on how to use chart patterns to get in early on winning stocks, we saw how these patterns, also called bases, serve as launching pads for a stock's big run. But as we all know, nothing goes up forever. By the time a stock has formed 3, 4, or more bases, that big run may be coming to an end. So as a general rule, focus on stocks breaking out of a first or second stage base. Those typically generate the largest gains. Third, fourth, or later stage bases can work, but they're riskier and are more likely to fail. So let's see how to count bases and see what stage the stock is in. Before we get into the details, keep in mind that IBD often does the counting for you. As you're going through the IBD 50, your weekly review, and other features as part of your weekend or daily routine, you'll often find mention of the base count. For example, this analysis for SolarWinds said it was in a late stage base, and this one for Ackman Financial said it was forming a third stage base. The point is, don't think you have to do all this on your own, especially when you're starting out. IBD does a lot of the work for you. It's typically easier to check the base count by looking at the weekly chart, since that gives you the longer-term perspective. This is a weekly chart for Priceline.com, ranging from 2008 to 2011. Priceline formed this deep cup with handle during the 2007 to 2008 bear market. A bear market, which typically means a decline of at least 20% in the major indexes, basically wipes the slate clean. For that reason, the base count for all stocks is reset to 1 when a bear market hits. But one important note, an interim correction, that is a milder market downturn where the indexes decline less than 20%, that does not reset the base count. So following the 2008 bear market, Priceline's cup with handle was considered a first stage base. It broke out and continued higher until it pulled back to form this new cup-shaped pattern. That was considered a second stage base. Priceline broke out of that cup and climbed higher for several weeks until it pulled back once again. Now here's a key point. As it formed this base, note how the low in this new pattern undercut the low in the prior pattern. When that happens, it resets the base count. So this cup-shaped pattern is now considered a first stage base. The reason is simple. That sharp decline breaks the underlying upward trend the stock had been following. So if the stock can regain its footing and move higher, that basically counts as a fresh start. And that's what Priceline did. It completed this first stage cup-shaped base, broke out, and moved steadily higher for about 3 months. Then it pulled back to form this second stage flat base. Priceline broke out again and made another nice move. One important thing to keep in mind, if a stock breaks out of one base, then starts forming another pattern before it goes up at least 20% from the prior buy point, both those patterns count as one base-on-base pattern. So if this earlier consolidation was a first stage base, these patterns together would count as a first stage base-on-base formation. Earlier, we saw how the IBD 50 analysis noted that SolarWinds was forming a late-stage cup with handle with the 57.24 buy point. Here's that late-stage pattern, and here's where that base count began. SolarWinds completed this double bottom in October 2011. It was a first-stage base because the low in this pattern undercut the low in this prior flat base. And by the way, if you had been doing your weekend routine around this time, you would have seen an alert to that base and buy point in the IBD 50 where it said, forming double bottom with potential 25.72 buy point. So you could have had it on your watch list before it launched its big move. SolarWinds broke out, moved higher, then formed this second stage base. And here's where it formed a third stage consolidation. So by the time we got to this fourth stage pattern, SolarWinds had already gone up around 137% in just 11 months. That was a good reason to view this late stage pattern with caution, and sure enough, after trying to move higher a few times, the stock sold off sharply. Note how this new low undercut the low in the prior base. So if SolarWinds is able to build a new pattern, it will be a first stage base. So that's a quick look at how to count bases. To keep improving your chart reading skills and build a timely watch list, Check the analysis in the IBD 50 and Your Weekly Review regularly, and tune in to the Market Wrap and Daily Stock Analysis videos at investors.com/IBDTV. Thanks for watching.